Welcome to the Tesla News Podcast, your daily dose of AI-selected updates on the U.S. carmaker. I'm Watson, your AI host powering the Tesla News Podcast. It's time to plug in, charge up, and spark some electrifying conversation. Let's get amped.
Rising electric vehicle sales in China and Porsche, Mercedes and Rolls-Royce's future plans. China's electric vehicle, EV, market continues to show robust growth, driven in part by the government's goal to have at least 50% of new car sales be new energy vehicles, NEVs, by 2035. This is underscored by a hefty $72.3 billion package in tax breaks announced for NEVs. Despite total vehicle sales in mainland China falling roughly 1.4% year-over-year in the first quarter of 2023, the performance of EVs paints a different picture. The Chinese EV brand BYD sold over 253,046 vehicles in June, a sizable jump from the previous year, and Li Auto delivered over 32,500 vehicles, marking a 150% surge from a year ago. The growth trend extends to international players, with Tesla reportedly selling 93,680 made-in-China EVs in June, a year-over-year increase of 18%. Meanwhile, Mercedes observed an impressive 109% growth in EV sales in China in Q1 2023. However, not all international players witnessed growth, with BMW reporting a sales dip of 6.6%. Looking ahead, the growing millionaire population in China, which is expected to double by 2026, could significantly drive luxury car sales. Porsche plans to capitalize on this market trend, aiming for over 80% of its sales to come from EVs by 2030 to maintain and grow its market share both in China and globally. Rolls-Royce has a similar strategy, planning to manufacture only EV models by 2030, with a new office in Shanghai to offering personalized experiences for its customers. Challenges and opportunities for Tesla and Stellantis amid rising competition from Chinese manufacturers. While sales of Tesla's electric vehicles increase globally, the company is facing challenges regarding profitability. Stellantis CEO Carlos Tavares acknowledges Tesla as a competitor but also points out the consistent decline in Tesla's profitability year-over-year, dropping from over 17% in the first half of 2022 to 10.5% in the first half of 2023. On the other hand, improvement in revenue and operating profit is noticed for Stellantis. Tavares predicts intensifying competition from Chinese electric vehicle manufacturers for all automakers, including Tesla. However, he believes Stellantis, which is currently more profitable than Tesla, is better equipped to handle the challenges of competition and Chinese price cuts. Tesla's impressive performance in European market. Tesla's Model Y was the most popular car in Europe in the first half of 2023, with 136,564 registrations. This represents a whopping 204% increase from last year. In fact, the Model Y surpassed vehicles like the Dacia Sandero and Volkswagen T-Roc in popularity. Tesla's Model 3 was the second most popular electric car, with 42,588 registrations. Key markets for the Model Y include Denmark, the Netherlands, and Norway. Interestingly, Tesla's EVs represented 2.82% of all new cars sold in Europe during the first half of 2023. Increased sales in Europe can be attributed to local production in Germany and price cuts. However, Chinese car brands, including BYD, have not made as big of a splash in Europe as expected. Financial risks and potential rewards for Tesla's sales and delivery center in Connecticut. Tesla plans to inaugurate a sales and delivery center at Mohegan Sun Casinos Mall in Connecticut by the end of this year. This development comes despite Connecticut's law banning automobile manufacturers from selling directly to consumers. Cars must be purchased through licensed dealerships. The casino's press release referred to Tesla's new store as a first-of-its-kind venture in the state. Critics, like Hayden Reynolds, chairman of the Connecticut Automotive Retail Association, argue that the direct-to-consumer sales model should not be permitted as dealer franchise laws are beneficial to consumers. However, many residents are pushing for change in policies to allow direct sales, believing it would encourage the adoption of EVs and assist in combating climate change. Major automakers to supply electric car charging in the U.S., challenging Tesla's dominance. 7 major automakers, including General Motors, Stellantis, Hyundai, Kia, Honda, BMW, and Mercedes-Benz, have banded together to form a new firm that will supply charging for electric vehicles in the U.S. This joint venture, whose name is yet to be revealed, is seen challenging Tesla's dominance of the EV market. The plan is to roll out 30,000 chargers across North America, starting with key roads and cities. This venture aligns with the Biden administration's goal of having 500,000 chargers by 2030, nearly quadrupling the current amount. Interestingly, General Motors, Mercedes, and other automakers have agreed to adopt Tesla's charging technology starting in 2025. The new charging company will provide support for both Tesla's technology and the combined charging system used by non-Tesla electric vehicles. Updates on Tesla's Cybertruck and other news. In recent Tesla happenings, 2 finished Cybertruck units were spotted in the parking lot of Gigafactory, Texas, raising curiosity about their purpose. The sighting of these vehicles with calibration equipment attached contributes to growing speculation about the development and progress of the Cybertruck. While some believe these may merely be for media reviews, others are hopeful they could indicate that Tesla is shifting from the pre-production phase to low-volume assembly. Meanwhile, Tesla is facing scrutiny from the California Attorney General's office over possible safety concerns and false advertising claims related to its autopilot feature. The investigation was initiated following a complaint about phantom braking issues and misleading assertions about the capabilities of Tesla's full self-driving system. Tesla Gigafactory expansion encounters hurdles. Tesla's plans to expand its Gigafactory in Brandenburg, Germany face challenges due to concerns over the new buildings being located in water protection zones. The state's environmental agency is calling for changes due to possible, insurmountable obstacles. However, the Grünheide plant is considered crucial for accelerating the shift to electric vehicles and for regional economic development. Its current construction enables it to produce approximately 150,000 electric vehicles per year, employing around 11,000 people. Environmental concerns, especially around water usage in the drought-prone region, have caused resistance. Despite slow approval processes hindering clean energy investments and Germany's climate targets, Tesla is expected to revise and resubmit its battery cell production plant expansion plans. This is all for today. Tune in tomorrow for more updates and don't forget to like and subscribe. Although hopefully of informative value, the purpose of this video is entertainment and not any kind of advice, especially not investment advice. The content is AI generated and hence potentially contains errors. Links to articles for further reading on the discussed topics are provided in the video description.